Hello traders, Gary Wagner here. Just about 10:50 in Honolulu, 4:50 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, August 23rd, 2019, and this is the Daily Report for Gold and Silver. First of all, I do wish to apologize. This will be a shortened edition and a special report of the gold forecast in that our internet connection, the fiber optics, was down today, which is forcing me to have a much smaller video size to upload to our end users. Nonetheless, this has been a phenomenal day in terms of gold and a frightening day in terms of the world economic global scenario. We had China coming out this morning and they announced that they would initiate tariffs on $75 billion worth of United States imports into China. That caused President Trump to send out a series of tweets, which obviously escalated the scenario. And these two salvos together came at a time when Fed Chairman Jerome Powell was speaking at Jackson Hole at the Economic Policy Symposium. His statements were that the trade war has really made his job more difficult. He is saying that the Fed will be more accommodative if needed, and all of these things collectively cause U.S. financial markets, the equities markets, to plummet and gold to soar. We are currently looking at a daily candlestick chart of December gold. It is trading at 1537.10. It had traded to a high of a couple dollars above this, but is much closer to the high and is the highest closing price on record since 2013, certainly this year. Of course, we are long from 1524 and have sat through a week in which we saw this market track lower in a very, very narrow and defined trading range up until today's market move. What we can say when we look at recent activity this week is, first of all, when we look at the area of $1,500 per ounce, we can see that that absolutely served as a very, very strong level of support. Of course, our stop right now is sitting at 1496.13, and we will look to move that up. What we want to do is see where this market wants to go next week, because as we've spoken about on many occasions, the key to this most recent increase in gold pricing has been absolutely based upon strong fundamental events. And these events have just ratcheted themselves up to a new level of concern. And with the announcement by China that they're implementing tariffs and President Trump sending a salvo of tweets back, it seems highly likely that this scenario could get much worse. It seems, if anything, that both sides are absolutely digging in deeper and holding ground. And rather than having statements in which either side is looking for something mutually acceptable or a solution which serves both countries, now we have China on the defensive because of some of the statements by Trump. And Trump did not create this trade war, but he is certainly trying to solve it. We will have to see where this goes next week, but I certainly believe that our initial target of 1561, based on these fundamentals, is now low. I would not be surprised to see gold trade to $1,600 per ounce over the next 30 days. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. My recommendation is to maintain your current long position and to maintain your current stop. We'll talk to you on Monday. Bye-bye.